Look, global financial markets have not performed well over the last few months. We've seen the stock market, crypto, and markets all around the world crash, and many people are still predicting that the worst is yet to come, and we could see another 20% correction or so from where we are currently at. So today's video, I want to go over a few of these perspectives from billionaire investors to CEOs of Fortune 500 companies, and also address things going on in the crypto space that have been a bit surprising. So starting off with CEOs. Recently, FedEx came out with their earnings, and FedEx CEO came out and warned of a worldwide recession in the coming months because they've seen a massive drop-off in their revenue, in their numbers. According to their most recent earnings report, you could see that their earnings per share ending August 31st, 2022 were at $3.44 per share versus $5.14 projected. And you can see also for revenue, $23.2 billion versus $23.59 billion expected. So they came in well below all of the estimates from all of the analysts on Wall Street. And that is not a good sign because FedEx helps to keep the world together. They are the ones that are shipping products from thousands of companies all around the world. And they are an indicator as to, are people buying more stuff? Are people not buying as much stuff? What is going on with companies? Are they continuing to order parts from around the world? And when we're seeing companies like FedEx, which are in charge of shipping the world's goods, see a dramatic decrease in their numbers, that is not a good sign. So according to their CEO, he says that he expects a worldwide recession in the coming months as they've seen a significant drop-off in demand and their numbers all across the board. So he said, while this performance is disappointing, they are aggressively accelerating cost reduction efforts, and they said that they're going to be closing 90 office locations, 5 corporate office facilities, defer hiring efforts, reduce flights, and cancel projects. So this is something that is definitely not a good sign for markets. Yes, we have known that things have been getting worse, but this is one of the first true things going on, true indicators going on from some of the world's biggest companies that shows we are seeing a massive drop-off in demand, and people simply are starting to tighten a bit in how much they're spending, and that is directly correlated to how much shipping FedEx is doing. Next thing is going to be with what's going on with billionaire investor. Billionaire investor Ray Dalio recently came out and said that he could potentially see the markets drop another 20% from where they currently are as the Federal Reserve continues to hike rates. Right now, we have seen that the Federal Reserve is expected to increase rates by a minimum of 75 basis points. Right now, the consensus that we're going to see a 75 basis point rate hike, with 84% of people predicting that, but we could see as much as a 100 basis point rate hike. And the reason for this, why he's expecting a massive drop-off in stocks from current levels, is because as we continue to see rates increase, it's going to hurt many companies, specifically tech companies. We'll see those take a bigger hit, but he's projecting that we could see a 20% negative impact on equity prices based on the present value. So that is what he is predicting as well. He says we're going to see a significant fall in private credit that will curtail spending. We're not going to see people spending as much because they're not going to be able to get those credit card limits as high as they had before. And overall, it's also going to affect how much people are getting paid from their jobs. This isn't going to have an impact directly and right away, he said, but over the next year to 18 months, he's expecting that this to finally occur and hit people's pockets and really take a hit there. Now let's talk about what's been going on with crypto. So we've seen a lot of fear in the crypto market over the last few days. We've seen that the crypto market has gone from fear, almost neutral, back to extreme fear territory as we're seeing markets just take a big hit. So right now, things are still not looking great for crypto. We've seen Ethereum have massive liquidations over the last 24 hours, and there's been over $127 million of liquidations following the Ethereum Merge. But first thing I want to go over is what's been going on with Sensorium Galaxy. So we've talked about Sensorium Galaxy multiple times on the channel before, and I was telling you guys how I thought it was a top metaverse project for the next bull market. We had seen dozens of other projects do 40, 50, 100x in the last bull market, and this is one that I think has huge potential to be one of those projects in the next bull market. So if you didn't see that video already, I'll link it down below. But since we last spoke, Sensorium Galaxy has made a couple of big update. So the token symbol is SENSO. And since we last spoke, they first of all just released the world's first metaverse streaming channel in run-up to global VR launch. And this was a big deal. Now they have a 24/7 live stream experience showcasing a series of exclusive Imperial parties featuring the company's original AI artists. This is something that actively is going on, and they've already had millions and millions of views of this live stream of their metaverse. So that's something that is pretty cool. Next thing that's happened is Sensorium just also finished a $75,000 airdrop. Senso token recently had this partnership with CoinMarketCap where they gave away $75,000. This is pretty cool because this was a way to get the community involved, following them on Twitter, following them on all different social media platforms. You could see all the ways that you were able to participate. And while this is already over, it finished on August 30th. Now they have announced the winners. The cool thing about this is that this is the first out of potentially many partnerships and many giveaways they're going to be doing in the future to help engage with their community, because that is something that is very important with Sensorium Galaxy, as they have hundreds of thousands of users using their app. They already have a strong community, and they're just trying to continue to build it even more. You can see here they say they're planning on launching a drop with 10,000 NFT cards from Senso Diap very soon. So this is a way that they've helped to engage the community. And last thing that's happened as of recently, since we last spoke, was that they just recently launched their Senso Diap, and this allows them to enter the play to earn arena, which is something that has been rapidly growing in the crypto space. Everyone likes to have a way to earn money by playing games and entering a metaverse, and that is exactly what Senso and Sensorium Galaxy has been doing. So the Senso Diap is a play to earn strategy card game, enabling participants to explore and interact with Sensorium Galaxy's metaverse through a series of highly engaging intergalactic missions. And this was also just recently announced right around the last 30 days or so. So as of recent, there's been a lot of big partnerships with Sensorium Galaxy, with their platform being upgraded, with their first metaverse streaming channel being released, and with their DApp. So definitely just keep this one on your radar. We're going to continue to talk about this over time because it is a project that I've been part of for a while. I had invested in it back in the last bull market, so I just want to let you guys know what has been going on with that. Moving on, let's talk a little bit about what's been happening with Ethereum. So as I briefly mentioned, there's been over $127 million of liquidations for Ethereum in the last 24 hours. This is important because we have seen that ETH 2.0 merge was supposed to be a big event for the market, supposed to create a massive rally, and many people were excited about this. So why we have seen so much negative come out of this, why we've seen massive liquidations, why we've seen the market fall, is not to do with ETH merger, but we have seen overall macro events and economic conditions just create the market sentiment that we're seeing now, which is very fearful. So that's why we've seen prices fall. In addition to this, with Ethereum, many people were expecting this ETH 2.0 merge to be very positive. Like I said, as a result of this, many people had longed Ethereum, and they got absolutely wrecked when we saw new economic reports come out, when we have seen that the Federal Reserve is now expected to have that 75 basis point rate hike. All these people that were betting on Ethereum long term using a bit of leverage, they got absolutely wrecked, and that is why we saw $127 million of liquidations in the last 24 hours. Other thing that's happened is with regulations. We've also seen that Gary Gensler came out and recently said how with Ethereum moving over from proof of work to proof of stake, this is going to be potentially more impacted by regulations with the US government. Gary Gensler argued recently that native assets of proof-of-stake blockchains could pass the Howey test, which is a critical test used to determine whether an asset is a security or not. And as a result of this, depending on how regulations continue to progress and what the US government does, it could actually impact Ethereum more so than it would have if Ethereum was proof of work. But we got to remember, being proof of stake has its benefits, significant benefits, in terms of scalability long term, in terms of energy consumption long term, and other aspects. But it could have a bigger impact being proof of stake with government regulations. The last thing I want to go over is with Ethereum Merge and Polygon's founder. So Polygon's co-founder recently came out and says that Ethereum's merge could bring 1 billion users to Web3. And why he says this is because we have seen that with Ethereum moving over from proof of work to proof of stake, it has been one of the biggest inflection points to make Ethereum more mainstream. We have seen so many institutions and enterprises stay away from Ethereum and crypto because of environmental concerns. But with this new upgrade, with it being proof of stake, Ethereum is now 99% more energy efficient, and that is one of the biggest concerns of the largest institutions in the world. They are concerned about energy consumption and like ESG requirements, so which is environmental, social, and government requirements. So that is something that could potentially help bring more people into Web 3.0. In addition to this, he says that not only this, but while ETH 2.0 is not going to make Ethereum more scalable right now, it gives it a roadmap forward to making it more scalable. With ETH moving over to proof of stake, it has become more energy efficient. We have not yet seen it become more scalable just yet, or able to process more transactions per second with the current upgrades, but according to their roadmap, there are still 4 or 5 more stages left in this roadmap after the merge that are going to help it become more scalable and more usable for millions of people, potentially billions of people all around the world. So right now, that's what's been going on with crypto and the stock market. Things are not looking great in the short term, but long term, we're seeing a lot of opportunities, not just in crypto, but also in the stock market. Now is the time where personally, I'm going to be continuing to dollar cost average into all my positions all across the board, because when most people are being really fearful, there's a lot of fear in the market. That's when I try to take advantage of it. That's why I try to dollar cost average long term. So let me know your thoughts, what your current strategies are, but I hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.